But I think it's safe to say at this point, we are going to see sort of this wholesale slowing down of appreciation. So in markets that are hot right now, that are growing at 8%, that might not mean they go negative. They might just mean they drop down to 3%, right? But I think a lot of markets that are sort of close to even right now may turn negative in the next couple of months because affordability, I think, is the big problem here. With mortgage rates staying as high as they have at 6.6, 6.7%, with prices continuing to go up, there just aren't enough buyers for the number of sellers that are going out there, right? Remember we said there are still buyers, and that's actually growing a little bit, but the number of sellers in the market is starting to outpace those buyers, and that's going to put downward pressure on pricing. Now, I don't think that means we are going to go in a crash, right? Because I want to come back to something that we talked about earlier. These types of corrections where home prices slow down after years of growth is totally normal. Housing market is cyclical, just like every market. The stock market is cyclical. The business cycle is cyclical. These things happen. And we are entering just a slower period of appreciation. And we need that. I think we need affordability to start to get restored. And I think we are going to enter a period where affordability might start to get a little bit better. But I want to say, and this is really important for your own decision-making about your portfolio, is that just because prices start to decline, that does not mean that there is going to be a crash. And I know that the last time that prices declined in the financial crisis, there was a crash. That is absolutely indisputably true. But that does not always happen. And in fact, that is the exception to what normally happens.